Hello students, uh, we have completed the cash budget in the previous session. Today we are going to start with regard to the flexible budget. The name itself indicates it's a budget which is flexible. It's a budget where you can able to prepare according to varying capacities. So you can prepare the budget according to different positions. For example, in a production center, you are producing goods at say 80% capacity. So for 80% capacity, you can also prepare budget at 60% capacity, at 100% capacity. So at different levels, you can prepare the budget. Example you take, if a person has say 1 lakh income, for 1 lakh income, you can prepare a budget for that level, say expenditure budget. Again, if a person's income is say 75,000, then you can prepare budget according to 75,000. So flexible budget, it's a budget where you prepare according to different levels. Say at 50% you prepare a budget, at 80% you prepare a budget, at 90% you prepare a budget. So it's a preparation of budget according to different levels. So you can able to prepare the budget at different levels. So this is called flexible budget, where the budget can be changed according to the nature. So however, before I can able to proceed with the problem, I would like to give an advice. This is a budget where you need to keep in mind regarding fixed cost and the variable cost. Fixed cost is calculated on total basis. Variable cost is calculated on per unit basis. I repeat, variable cost is calculated on per unit basis. Fixed cost is calculated on total basis. A manufacturing company has a production capacity of 20,000 units per annum. The expenses for production of 10,000 units for a period are furnished below. So a manufacturing company has a total capacity to produce 20,000 units. It can produce 20,000 units, but they have given the data only for 10,000 units, that is, which is equal to 50%. Because 10,000 is 50% of 20,000. Full capacity, 100% capacity is 20,000 units. But the information given to us in the question is only 50%, that is 10,000 units for a period are furnished below. Material, it's a variable cost. Students, keep in mind, all variable cost is calculated on per unit. Fixed cost is calculated on totals. So material, it's variable cost. Wages, variable cost. Manufacturing expenses, 40% fixed, then 60% variable. I repeat, 40% fixed, then 60% variable. Administration expenses, all are fixed. That is 5 rupee, completely it's fixed. So as I told you, fixed cost is calculated on total. So per unit is 5 rupee into 10,000 units. The information is for 10,000 units. So administration expenses, 5 rupees into 10,000, it's 50,000. So therefore administration expenses will be 50,000. Selling and distribution expenses, 60% fixed, then remaining 40% will be variable. 60% fixed, 40% variable. Total cost is 80 rupees, profit is 20 rupees, selling price is 100 rupees. So total cost plus profit is equal to selling price. 80 plus 20 is equal to 100. So 100 is called selling price. Prepare a flexible budget for 60%, 70%, 80% level of activity. Information given in the question is for 50%. You need to prepare the budget for 60, 70 and 90%. It is expected that the present unit selling price will remain constant up to 60% activity. Selling price will be 100. No change in selling price of rupees 100 up to 60%. Up to 60% selling price will be 100. Beyond which a 5% deduction is contemplated up to 90% level of activity. That is 90% activity level. It means 50%, 60% capacity selling price will be 100. 70%, 90% selling price will be 95. That's 100 minus 5%. So I repeat, students, 50%, 60% it's 100 rupee. 70%, 90% it will be less 5%, that's 95 rupee. Okay, students, before I can able to go to the next slide of working note, I would like to suggest you variable is calculated on per unit, fixed is calculated on totals. So working note, so let us go for the manufacturing expenses, students. Manufacturing expenses, kindly look at the question. 40% is fixed, then 60% is variable. 40% fixed, 60% variable. As said before, variable cost you need to look into per unit, fixed cost you need to look into total. So manufacturing expenses at 50% is 10 rupee. 10 rupee into 10,000 units will be 1 lakh. 10 rupee into 10,000 will be 1 lakh. Into 40% will be 40,000. Okay, students, 10 rupees into 10,000 units, because the information given in the question is 10,000 units. Total you get 1 lakh. In that 1 lakh, 40% is fixed. So therefore 40,000 is fixed. As explained earlier, fixed cost total, variable cost per unit. Now go to variable cost. 10 rupee into 60%, 6 rupee. We don't go for multiplying by units, because variable cost we don't look into total, we look into per unit. So variable cost directly we calculate per unit, fixed cost we directly calculate on total. Coming to selling expenses, as explained in the question clearly, 60% is fixed, then remaining 40% will be variable. In the question, they are given 60% is fixed, then remaining 40% is variable. So the selling expenses given in the question is 5 rupee. 5 into 10,000 units is 50,000 rupee. Into 60% you get 30,000 rupees. So fixed selling expenses is 30,000. Then variable it's 2 rupee. Next, calculation of new selling price. As explained, the current selling price, that is at 50% is 100, 60% 100, 70%, 90% it's 5 less. So it's 95. Calculation of units, it's very easy. At 50% it's 10,000 units. At 60% it's 12,000 units. How you get? Total capacity in the question is 20,000 units. That's the first data given in the question. 20,000 units. 20,000 into 60%, it's 12,000. 20,000 into 70%, it's 14,000. 20,000 into 90%, it's 18,000. Calculation of administration overhead. So fixed is always calculated on total. 5 rupees into 10,000 units, it's 50,000 rupees. So 5 rupee at 10,000 units, totally you get 50,000. So students, when you go for preparing the budget, fixed cost total, variable cost per unit. Okay, students, this is a flexible budget at 60%, that's 12,000, 70% that's 14,000, and 90% that's 18,000. If you just look at the bird's eye view, this is similar to the cost sheet which you prepared in the fourth sem: prime cost, factory cost, cost of production, and so on. So carefully observe the statement. All variable I have highlighted in yellow one. So all variable will be calculated on per unit, and hence it is highlighted in yellow. It will remain constant. It will not change. Variable per unit will not change. Fixed total will not change. Look at fixed cost, have highlighted in green one, the green color. So in case of fixed, you need to consider total, the green one. Variable, you need to consider the per unit, which is yellow one. So first, let us go to the material, students. So first we take material. 40 rupee material is a variable cost. 40 rupees into 12,000, 4,80,000. Next, 40 rupee into 70%, that is 14,000 units, 5,60,000. 40 rupee into 90%, that is 18,000, you get 7,20,000. So variable you need to consider per unit. Come back to labor. Labor, no change at all. As of material, there is no change at all. 20 rupee given in the question itself. So 20 into 12,000 is 24,000. 20 into 14,000, sorry students, 20 into 12,000 is 2,40,000. 20 into 14,000 is 2,80,000. Then 20 into 18,000 is 3,60,000. So if you total, you get prime cost 7,20,000, 2 lakh, 7,20,000, and 8,40,000, and then it's 10,80,000. So next, factory overhead. We have factory overhead. We have both fixed and variable. That's called manufacturing expenses. Manufacturing expenses is called factory overhead. So we have 40% fixed and 60% variable, which we've already calculated. Fixed, you consider total 40,000 for 12,000 units, 40,000 for 14,000 units, 40,000 for 18,000 units. So in case of fixed, you need to look into total. In case of variable, you need to look into per unit. So fixed manufacturing expenses is 40,000, 40,000, 40,000 for all units level of activity. So 40,000 divided by 12,000, you get 3.33. 40,000 divided by 14,000, you get 2.85. 40,000 divided by 18,000, you get 2.22. Next, we have 60% variable manufacturing expenses. Kindly refer to the previous slide. So variable, you need to look into per unit, yellow one highlighted. So 6 rupee at 12,000, 6 rupee at 14,000, 6 rupee at 18,000. So how fixed total will remain constant? Variable per unit will remain constant. So 6 into 12,000, it's 72,000. 6 into 14,000, it's 84,000. 6 into 18,000, it's 10 lakh 8,000. So we get FC factory cost 8,32,000, 9,64,000, 12,28,000. Add administration overhead. It's all total is fixed. 50,000, 50,000, 50,000, 100% fixed. No variable at all. So 50,000 divided by 12,000, it's 4.16. 50,000 divided by 14,000 is 3.57. 50,000 divided by 18,000 is 2.77. So we get cost of production. Can also be called as cost of goods sold, because we don't have any closing and opening stock of finished goods. So therefore cost of production can also be called as cost of goods sold. 8,82,000, 10,14,000, and then 12,78,000. Next, add selling overheads. As information given in the question, selling overhead 60% is fixed and remaining 40% is variable. So we already done this working note in the previous slide. So fixed total is constant, 30,000 at 12,000 units, 30,000 at 14,000 units, 30,000 at 18,000 units. It will remain same. Okay. So 30,000 divided by 12,000 is 2.5. 30,000 divided by 14,000 is 2.14. 30,000 divided by 18,000 is 1.66. Next we have variable cost. We calculated in the previous slide per unit. Per unit is 2 rupee, 2 rupee, 2 rupee. It will remain constant. 2 into 12,000 is 24,000. 2 into 14,000 it's 28,000. 2 into 18,000 it's 36,000. So we get a total cost of 9,36,000, 10,72,000, and then 13,44,000. So sales, keep profit pending. Sales, it's 100 rupee at 60%. So 100 into 12,000 units is 1,20,000. Difference between sales and total cost will be the profit. It's 12 lakh minus 9,36,000. You get 2,64,000 as total profit. If you divide by 12,000 units, you get 22 rupee per unit profit. Then selling price at 70%, it's 5% less. 100 minus 5%, you get 95 rupee. So 95 rupee into 14,000 is 13 lakh 30,000. 95 into 14,000, it's 13 lakh 30,000. The difference between sales and total cost will be the profit. Then selling price at 90% is 5% less. So it's 95 into 18,000. You get 17 lakh 10,000. Difference is called as profit. So any doubts, feel free to ask me, students. Thank you.